This is Jack from Alpha Charts with a state of the market video. Today is August 20th, 2022. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, quick note. If you haven't become a super follow yet, consider doing that. Just a quick rundown of what that gives you. I give you an expanded stocks to watch, usually at least every other week, if not every week. It's my full really watch list of the best setups I could find. It's I have like over 50 of them for tonight's video. It's awesome that I'm able to share that with you. I give you on Sunday top setups. I give you a market note to begin the week. Also, I do my long view video just for my super follows. That's for looking at weekly charts, longer term. I do my scans every single night, and Monday through Thursday is just for my super follows. So, the best scans I can find, I share with you guys the whole thing. I also do a midweek video for my super follows. I do follow-ups on the setups. We talk about where, things are looking extended, where we should take profit, where I may see money rotating to, and so on. Thursday, I do a midweek note for everybody. Again, just kind of keep everybody up to date with what's going on in the market. I also create a community where not only do I post everything into the community as well that I post on my super follows, and I also open it up, and my super follows can interact with each other and me, and we can all share ideas. It's very open, non-judgmental type of place for everyone to share ideas. I think that's a great thing. Again, only let my super follows in there. Again, I give obviously my opinion throughout the week. I'm also doing any setups that may show up as the week progresses. I'll add them, and my DMs are open, right? So if somebody has a question about what's going on, I'll give you my opinion on it, and that's what I could promise you. What I would do in your situation. Anyway, if you're interested, it's a super follow. It's through Twitter at AlphaCharts365. It's a great value. I give you tons and tons of content, and really good actionable stuff. Feedback has been absolutely amazing from the folks that are super follows already. So thank you all very much if you are super follow, and yeah, check it out. All right, let's get to this video. Stocks to watch. I'm sorry, state of the market. S&P. We talked about getting rejected at the declining 200-day. There's also a trend line right here, and that's exactly what has happened. So the question we have now is this gonna hold over here at this 41? We'll call 4150, right at the rising 23-day EMA. This green area, or does it roll over? Right? We don't know the answer to that yet, but they're both are possibilities. So that's what we're looking for there. And again, it was down 1.29% on Friday, a little bit worse on the equal weight index, S&P index. Again, try to beat the 200-day, couldn't, came back. So do we make that higher low here? Or does it roll over? Again, that 23-day EMA is rising into there. That's what we don't know yet, right? It's unknown. Hughes didn't make it to the 200 days. So you see how they're a little bit weaker. And there's your VWAP from the highs, and we're now back below that. I was very happy when we were above it. This was absolutely fine, but Friday down almost 2%, back below it. Again, this is the area, this 315-ish area, right? 315 and 320, something like that, 319. That area has to hold. If not, I think we come back into Tesla's 50-day, and not as nice looking. And the equal weights down about the same, right? But it's already to the 23-day. That's interesting. We'll see if this holds or not. And then again, you have this greenish area, which has been, resistance and support in the past. So we'll see what happens when it comes into this area. But again, not the best look unless this holds, right? That's what we want to see. Small caps. Again, rejected the declining 200-day. No big deal if it holds this, 190-ish, which is right where the rising 23-day moving average is. I'm not too worried about it, right? If we break down below this green area, that's a different story. I think we can go a lot lower. Next up, IWO. Didn't quite make it to the declining 200-day. Again, it's a big deal if it does or doesn't. Now we'll see what happens when it gets to 234, 235, this general green area, and see if it can hold it. If it can hold it, it's fine, right? It's fine. No big deal. If it cuts right through it, that's a problem. Volume wasn't like robust on Friday, and it was OPEX, I think. So, maybe it's just shenanigans. Maybe this area does hold, right? We can't, we have to be open to both possibilities. So let's look at mid caps real fast, and we'll finish our indexes. Again, try to break above, couldn't. Now we'll see if this green area can hold. Okay. So you might, we're coming back into the greenish area and the rising 23 days, and that's the area that we have to watch. Let's look under the hood now and look at the ETFs. XLF. So held where it had to back here, ran up hard, right? Now if it pulls back and makes an inverse head and shoulders and breaks out, 200-day comes down and starts to flatten, that would be the bullish scenario, right? This 23-day or even the 50-day holds, right? And it makes a nice, beautiful, symmetrical inverse head and shoulders, and things look good. That's the bullish scenario. The bearish scenario is obviously a breakdown here. That's SMH is next. SMH. All right. Again, we drew this in last time, right? A pullback to make this type of inverse head and shoulders. Do 200-day coming down and kind of flattening out over here, and then it breaking out above it. That's the bullish scenario. Maybe this is the next step in a bullish thesis, right? Again, a breakdown would be the bearish. Let's look at transports. I can easily say very similar things about transports here, right? Inverse head and shoulders, come down, make the bullish scenario, and then move higher. So no, I don't like that it's pulling back, but maybe in a bigger structure, it's okay. And then XHB. It actually broke out, declining 200-day. Now it's coming back. And again, it may have some kind of funky type of, bottoming pattern. We'll find out. But if it starts breaking down past this 50-day, $60 or so, that's a problem. Big problem. So right now, no violations on the ETFs. Maybe it's a bigger, larger bottoming type pattern waiting for the 200-day to come a little bit further and then start to flatten out, which could take weeks and months to do, right? It's not going to happen like in a week. So let's look even further under the hood. Volatility. What's going on there? Let's just get rid of these moving averages because I don't like them on these charts. And go to line chart. Okay, volatility. You know what? Spiked up a little bit, but nothing crazy. Still under 21 in the 20 range. Nothing crazy there. I'm not worried about that. All right, credit spreads. So we had this counter trend rally. That's what this kind of is right now. But I'm not too worried about it yet. It's something to watch, right? Because we don't know if we're in this type of scenario right there. But I'm not worried about it right now. If we get a straight up move further, we get, maybe higher than this high, 1.58, that would make me much more concerned. As of right now, this is caution, but not like a game changer, not like, the end of the world type stuff, right? This is terrible. Game changer. So caution on bond spreads, credit spreads. Put call ratio, still right in the middle, 1 foot in, 1 foot out. No one knows which way, whipsaw type market. So no real signal there, except there's room to both sides, right? Percent stocks above the 50-day. We talked how this was overheated and a pullback was needed. So maybe that's all this is, right? If we can, pull back some, maybe, even in here some, we've seen some of these pullbacks have been decent, right? Decent pullbacks. That'd be fine. We talked, again, we mentioned it's getting overheated. So it's doing what it's supposed to do, right? Now, Bitcoin. So was this a bear flag breaking down? Or, or is it going to hold over here and really form kind of a complex type of bottom here? We don't know the answer to that. I do think if it breaks down, I think 12,000-ish, 13,000, somewhere around there, maybe down here into the 12,000 range. I think that could be very possible. But with that being said, it digs in here. I think equities have a chance, right? Or just chops around here. So I think equities have a chance. So in the end, I mean, nothing is telling me that we're in this catastrophic failure. Everything basically said we're in a digestion range. We got a little overheated on this move up, which, again, if you're a super follow, we talked about that, about taking profits on the way up. And as we were getting overheated, time to take profits, raise stops, all that kind of stuff. Well, now we're going to come to the point probably over the next week or so, maybe to the end of the month, obviously end of the month. So maybe over the next 2 weeks. And we're going to see what happens when we start to test that range, right? And so let's look at the 23 and the 50-day only here. And the question is, do we stop here? Or can we go all the way down to the 50, which is very possible, and still make a higher low, right? And still make a higher low if we just tag the 50. So just be aware of that. And the pullback would be from here, 6%, from the peak top, from the S&P, 10%. All right. So that totally within character of a 24% move, we retrace 10%, and then we get to start to move higher. Again, at that point, the nice thing about that is the 200-day will be down in this range probably and starting to flatten out. And it may make it easier for it to bust above and stay above it, like in the S&P, right? Come down, even if it comes all the way down here to, we'll call it 4,000-ish level, whatever it may be. And then we start to get, the 200-day, maybe in this range, and then we break out. Okay. Seasonally, real fast. Seasonally, it's a really terrible time of year in September and October. So just be aware of that. Labor Day on it's a really hard time of year to historically to trade. It's been a negative time period. So just be aware of that. Doesn't mean it's going to have to be, but it definitely could be. So, caution is the word. It's really unclear. I think smaller positions, keep stopping close, 50% invested, and if they start to stop out, stay in cash. All right. Hope you all are well. Good luck this week. Again, become a super follow if you haven't yet at AlphaCharts365. Thank you all very much. I appreciate it. Take care.